Today, we are looking at a piece of analysis that, frankly, is built around numbers so big they almost don't feel real. The headline is this. IREN has secured a massive $9.7 billion five-year contract with Microsoft for AI cloud services. This isn't just a win, it's a foundation for the entire company going forward.
It's absolutely monumental.
Yeah.
And you would expect, fireworks in the market, a huge stock pop.
Right.
But that's the mystery, and this is what sent us digging into the source material you sent over.
Hmm.
Right after announcing this historic deal, the stock actually dropped. It fell about 5% yesterday from around $46 down to $43.62.
So that's the core question. How do you square a $9.7 billion victory with the market, pulling back? The news screams domination, but the stock chart suggests panic.
Exactly.
So our mission today is to unpack that. We're going to figure out if this is a sign of some real underlying problem or if it's just a classic bear trap hiding what looks like a fundamental revenue explosion.
And to do that, we have to dig into two specific things the analysis points out. First, the actual financial mechanics of the deal itself, with a key detail in there. And second, we have to look at the capital filing that actually spooked everyone.
Okay, but before we get lost in the weeds, let's just hit the biggest point from the analysis. The number one argument against a company like this is always cash burn, right? Liquidity.
Always.
So how does this deal address that?
Well, it doesn't just address it. It completely kills that entire bear case from the word go. The analysis highlights a golden detail in the contract terms. Microsoft is putting up a 20% prepayment on the entire deal.
20% of almost $10 billion. So that's what, nearly $2 billion?
Roughly $1.9 billion in cash, wired directly to IREN up front.
That's not just changing the liquidity picture. That rebuilds the entire foundation of the business in a single transaction.
It absolutely does. It's the ultimate vote of confidence. But, Kate, let's back up and really unpack the scale of this whole AI cloud alliance.
Let's do it. So we're talking 5 years of guaranteed revenue. This isn't some speculative thing. It's a long-term binding agreement, a financial anchor for the next half decade.
And that anchor is tied to very specific hardware. The analysis really emphasizes this. The entire deal is built around deploying the newest, most powerful NVIDIA chips, the GB300 Blackwell GPUs.
And they're all going to one place.
All going to IREN's data center in Childress, Texas.
Okay, so for those of us listening who don't follow every single chip release, why is that specific GPU so important? Why does it justify a nearly $10 billion deal?
It's all about scarcity and raw power. The GB300 isn't just a faster chip. It is the premium purpose-built architecture for training the massive AI models that Microsoft Azure needs.
So it's top of the line.
It's more than that. It's in extremely high demand and very short supply globally. By securing a huge chunk of these, IREN gets immense pricing power. And as we'll see later, that pricing power flows directly to their profit margins.
Which brings us back to that $1.9 billion prepayment. It really shows Microsoft is saying, we need this infrastructure, we need it now, and you're the ones to build it.
Precisely. That prepayment is the critical capital to get the ball rolling, to buy the first tranches of hardware and start building immediately. It solves the chicken and egg funding problem right out of the gate.
And the source material says this is more than just a cash deal. It's about a change in identity for the company, isn't it?
It's a complete paradigm shift. The analysis says IREN goes from being, a Bitcoin miner with some AI upside to a tier 1 AI hyperscaler partner for Microsoft overnight. That's a totally different risk profile, a different valuation model. They're an infrastructure company now.
Okay, so if everything is that good guaranteed contract, massive cash infusion, a total rebrand as an AI leader, why on earth did the stock fall 5%? Let's solve this, because this is why the weekend sold.
Right. The stock dropped to $43.62. And the trigger, it wasn't the contract itself. It was what IREN did right after announcing it. They filed a shelf registration to raise about $660 million.
And the market here is raising capital, and the first thing that comes to mind is dilution. More shares, my slice of the pie gets smaller, so I sell.
It's that knee-jerk reaction, exactly. But it's a total misunderstanding of what's happening here. The analysis connects the dots.
But wait a second, I have to play the skeptic here. If Microsoft just gave you almost $2 billion in cash, why would you immediately turn around and file to raise another $660 million?
Yeah.
The timing feels off. It seems like it would obviously spook people.
And it did. But that's the key point. You have to look at the total cost to build this thing out. That $1.9 billion is a down payment. But to acquire all of the NVIDIA GB300s, they need to satisfy a $10 billion contract. That costs a lot more.
So the $660 million isn't for keeping the lights on?
Not at all. The analysis frames it as strategic funding. It's the bridge capital required to acquire the rest of the hardware they need to fulfill the guaranteed Microsoft deal. They're raising money to buy the assets that will generate $9.7 billion in revenue.
This is the distinction we have to make crystal clear. It's not survival debt, it's growth debt or, strategic capital. It's an investment to service a contract that the analysis says will pay back tenfold.
Exactly. So the verdict on the drop is pretty clear. It was a classic sell the news moment fueled by a misunderstanding. The fundamentals, the backlog, everything exploded upwards. The company's just making the logical next move to meet that demand.
Okay, let's shift to the aha moment in all of this, the actual financial transformation. The numbers in the analysis report are pretty staggering.
The predictability is what's so powerful. The report estimates that the annual recurring revenue from just this one deal will be around $1.94 billion.
Every year.
Every single year, like clockwork, through 2030. Think about that. It completely anchors their revenue, replacing all that crypto mining volatility with stable, predictable cash flow.
Stability is one thing, but profit is what really moves the needle. What about the margins on this stuff?
This is where it gets truly transformative. The AI cloud EBITDA margins are projected to be at 85%. 85%. That is an incredible margin profile. It means almost every dollar of that nearly $2 billion in annual revenue drops straight down to operating profit.
And just to connect the dots for everyone listening, that's possible because the hardware, those GB300s, are so scarce that IREN can charge a massive premium for access.
That's the entire engine right there. And to really put a pin in how big this is, the analysis makes a stunning comparison.
Go on.
It says this one Microsoft deal is projected to generate more EBITDA annually than IREN's entire market cap was just 2 years ago.
Say that again?
The profit they will now make in a single year is more than the entire value the market placed on the company just 24 months ago. That's how radical this transformation is.
So for you listening, the takeaway here is you have to completely change your model for this company. It's not a Bitcoin play anymore. It's a high margin, stable, tier 1 AI infrastructure play, and Wall Street will have to value it that way. So now that we see how strong the business is, let's talk about where the stock price might be headed. We're sitting at 43.62 after that dip. Where do the analysts think it's going?
Well, the current targets are trying to catch up to this new reality. The consensus target, so the average across all the analysts, is $83.45.
Which is almost 100% upside from where we are right now.
Pretty much double.
Yeah.
And that's just the average.
What's the high end, the bull case, for the analysts who think this is just the beginning?
The street high target mentioned in the analysis goes all the way up to $136. That's a potential 300% upside from today's price.
So the simple logic in the report is, if you believe AI demand is real and this Microsoft contract is locked in, then the current stock price is just fundamentally mispriced.
The analysis literally calls it a 50% discount to the average target. The valuation just hasn't caught up to the reality of the backlog.
Okay, let's wrap this up. Let's synthesize the key takeaways for you. First, this is a complete financial transformation. IREN is no longer a crypto miner first, it's an AI engine room.
Second, that $660 million capital raise that caused the dip. It wasn't a crisis. It was a strategic and necessary move to fund a guaranteed $10 billion contract. It was good debt.
And third, this all creates high-margin, predictable revenue through 2030, and that $1.9 billion prepayment from Microsoft wiped out any liquidity risk from day one.
The data really just points in one direction.
Yeah.
A fundamentally stronger company that had a temporary, irrational stock drop.
So as we close out, I think the analysis raises a really provocative question for you to think about.
Yeah, if the incredible 85% profitability of this deal is all based on having the newest, best NVIDIA GB300 architecture first, what does that mean for all the older traditional data centers? The ones still running last-gen hardware or who can't get their hands on these new chips?
Is this one deal a sign of a permanent winner-take-all shift in the AI infrastructure world where the companies that secure the absolute best hardware first just leave everyone else behind? That's something to watch as this whole sector evolves.
We encourage you to keep exploring what that means for the future of the cloud.